Hello everyone, welcome back to my channel. Today we're going to be covering a video over partnerships. It's going to be formatted very similar to the sole proprietorship video. First, what is a partnership? It's a form of business entity. Why do you care? If you have a business and you have a partner and you didn't file any legal documentation with your partner whenever you set up your business, you will be a partnership. That's how it works. So, with that being said, because there is zero formal setup to be required, the only thing that you really need is either by word of mouth or written down. You need to have a partnership agreement that needs to separate how assets are going to be distributed and how operations are going to be handled and all the things like that within the business. With that being said, please, if you're watching this before you set up a partnership, write it down, every aspect, and get it signed by all parties involved. Most optimally, you would go to a lawyer, or you can have some accountants offer this service as well. Now, this is my area of expertise. It's your liability and your tax implications. When you're setting this up, because there is zero formal setup process, you have zero protection of your personal assets. Meaning, if everything goes under in the business and you still have liabilities you have to cover, you have to pay for them out of your personal assets. So, that's the negative. However, with the partnership agreements, there's lots of flexibility with how assets and losses and operations can all be separated out. It is actually a technique that a lot of very, very rich people use to invest in small businesses, and then they get distributed the early losses and it gets carried over. It's complicated stuff, but there are aspects about partnerships that are very good for parties that are involved. So you have to discuss that all with your accountant. It's all very individual. How the tax implications are going to be passed on to you and your other partners. So the income will be reported on your personal tax return. Partnerships are pass-through entities. So basically what has to happen is you need to get all your tax documentation to your tax accountant by March the 15th, preferably give them a couple of days. Shoot for March the 10th at the latest. And what they have to do is they have to file a Form 1065. And all that form does is it reports your business's income and expenses and then any credits, deductions, etc. And then from that return, it kicks the income over to a Form K1, which is whatever the bottom line of the 1065 is, multiplied by your interest in the partnership. And then from the K1, it's reported on your 1040. I hope this makes sense. I know some of this is a little more complicated than the sole proprietorship. So if you have any questions, please drop them down in the comments, or you can email me personally at my email that is always going to be listed in the description. Thanks.